Welcome to third quarter results of the Sifter Fund. The quarter started with a substantial rise in July, which surprised many investors. The company earnings were better than expected and the Sifter Fund's returns was more than 10% in July. In August, however, the market sentiments cooled and the fund decreased of about 3%. September has historically been a bad month for the stock markets and it was again. The fund decreased by 6.8% and due to this decrease, the fund's return remained plus or minus zero in the third quartile. Since the beginning of the year, Sifter Fund had decreased by 16.8% in euros. Now, let's see which companies in the fund did the best during the quarter. The fund's top gainers were ADB, VeriSign and Texas Instruments. There was no particular reason for the rise in share prices of these companies. All top gainers are typically companies that should be able to do well in the down market because of their business characteristics. Similarly, among the decliners in the third quartile were Sony Corporation, West Pharmaceutical and Taiwan Semiconductor. For example, TSMC's share price was down by fears of China's threats to Taiwan. The sales of Sony PlayStation 5 games have slowed down a bit because the company has suffered from raw material shortages for the PlayStation 5 consoles. The strengthening of the dollar has helped the euro-dominated investor. The Sifter investor has benefited from owning companies listed in the New York Stock Exchange. If you mainly own European shares, the change in dollar doesn't matter too much to you, at least from the investment point of view. About 70% of the companies in the Sifter Fund are in dollar-based investments. In other words, when the dollar has strengthened by about 14.5% since the year started, this has boosted the fund's returns calculated in euros. However, the headwinds has come from the depreciation of the Japanese yen against the euro by about 7% in this year. Sifter portfolio includes 4 Japanese companies weighting together roughly 11%. Over the years, we have concluded that we don't hedge currencies in the fund. Predicting changes in currencies is even more difficult than correctly predicting the rise or fall of the stock market. In addition, hedging currencies would only generate additional cost for investors. So, what did we do during the quarter? During July and September, the lion's share of our time was spent analyzing the results of the companies we own. The second quarter earnings were excellent, and so far, inflation, rising interest rates, or decline in the economy are not reflected in their earnings or outlooks. We also made another video based on these considerations, explaining how we believe our companies will perform in the changing economic environment. During the quarter, we also investigated about 10 new companies, of which perhaps the most interesting were the US-based Edwards Life Sciences and the Swiss-based Temenos. However, we didn't end up investing in these either because they didn't meet the investment criteria we set for quality companies. So what does the stock market look like? Well, the bear markets are always psychologically tricky times, but are essential part of investing, unfortunately. Investors often focus too much on share prices and macroeconomic prospects in the short term. Of course, it's pretty clear that all investors want the returns, and that's what we want too. Since we think it's impossible to beat the market with a short-term game, we have chosen a long-term quality game. In this game, one has to make sure to own strong enough companies. We apply 5-year estimates for our company earnings in the long-term game. At the end of September, we updated the 5-year earnings yield estimate of the Sifter holdings, and based on these results, we remain confident in the long term. More about this in the following video. Thank you for joining us and have a good day.